ethanol reserves increased by $930 million in 2 weeks. NCC begins forensic audit of telcos over data depletion. Price of maize set to crash, says CBN. Average petrol price decreased by 0.94% in December, says NBS. Details of this and more on Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. About 300,000 metric tons of maize are soon to be released into the Nigerian market from strategic anchors under the Ankoboros program of the Central Bank of Nigeria, which watchers believe will reduce the current price of maize from 155,000 naira per metric ton. The anticipated release follows moves by the CBN working with the Nigerian Customs Service in the last quarter of 2020 to facilitate import waivers to 4 agro-processing companies to import 262,000 tons of maize to bridge the shortfall in production and augment local production with the release of 300,000 metric tons in February 2021. It is expected that the prices of maize in the Nigerian market will drop significantly, thereby increasing demand for the crop and ultimately enhancing the gains of maize farmers. Prior to the CBN-NCS collaboration, President Muhammadu Buhari had approved the release of 30,000 tons of maize from the National Strategic Grain Reserve to support the Poultry Association of Nigeria at a subsidized rate. The National Bureau of Statistics says that average price paid by consumers for premium motor spirit petrol increased by 14.00% year-on-year and decreased month-on-month by 0.94% to 165.70 naira in December 2020 from 167.27 naira in November 2020. This is contained in the Premium Motor Spirit Price Watch December 2020. The report shows that states with the highest average price of premium motor spirit petrol were Abia, Kwara and Kebbi at 169.92 naira, while states with lowest average price of petroleum motor spirit were Kaduna, Katsina and Bauchi at 162.57 naira. Gold prices inched higher on Tuesday after hitting a 1-1 per 2-month low in the previous session as hopes of further global stimulus to stem the economic toll from the COVID-19 pandemic countered a firmer dollar. It is important for Nigeria to cut the cost of production while ensuring the largest oil volumes possible be produced. Vice President Yemi Osinbajo stated this when he held talks with the Oil Producers Trade Section and the Independent Petroleum Producers Group. The Vice President also backed the increased focus on gas and said it should be an enabler for quick development nodes that balance reconciling and maintaining our domestic gas obligation and at the same time improving the gas environment in such a way that the country will be able to benefit maximally from it. Meanwhile, the Nigerian Senate has faulted the Ministry of Petroleum Resources over the payment of 98.4 million naira awareness program for the petroleum industry bill without recourse to processes and procedures that Senate Committee on Public Accounts has therefore accepted the 2015 Auditor General of the Federation's report, which queries the misapplication of public funds in the Ministry of Petroleum Resources. The report noted that in violation of the procurement processes, an entry for 98.4 million naira was made in favor of a firm for printing of bills for awareness program for the PIB. Well, 10 years down the line, the Ninth Assembly is set to draft from scratch a bill overhauling the nation's petroleum sector and will aim to pass it by the end of 2020. But that was not to be. PIB was first introduced to the National Assembly in December 2008. A presidential committee set up in 2007 to look into the oil and gas sector came up with the idea of this bill, which aims to increase transparency at the NNPC and to increase Nigeria's share of oil revenue. To take a look at the journey so far and the promise of passage in 2021, I have joining me via telephone an Associate Professor of Development Economics at the University of Port Harcourt, Dr. Godly Otto. Doctor, you're welcome to Business Express.
You're welcome. Good morning.
Good morning, Doctor. Well, to start with, objections and from international oil companies and the Nigerian National Petroleum Corporation, that is our own NNPC, have delayed the passage into law of the PIB. What, in your view, are the issues?
Yes, first, the NNPC, especially the staff of NNPC, think that there will be some reforms in the NNPC. The NNPC will be scrapped. And in this place, some company will be set up. For example, the National Oil Company will be set up. The National Gas Company will be set up. And the National Petroleum Assets Management Company will also be set up. So there is fear that in course of these reforms, there may be losses and there may be gains. So that's from the part of the NNP. From the part of the IOC, that's the International Oil Company, there is also the fear that there may be political interferences on their investments. There may be a situation where political manipulations and intrigues will come in, and that will also affect their operations. Secondly, they're also worried about the weak infrastructure in the system and how that will affect the operations. So these are the issues they have.
Okay, having highlighted these issues, you also bear me witness that to ensure the speedy passage, the PIB was actually broken into different bills, one of which was the PIGB to address various aspects of the oil industry for quick passage of the aspects of the old law that were not controversial, while the controversial bits they said could wait. Why then are we still where we are today?
Making progress. I agree with you that the bill was unbundled into four: the old committee bill, the fiscal review bill, the upstream and midstream bill, and then the PIGB. Now you recall that the PIGB was passed by Senate in May 2017. In January 2018 also, the House of Rep passed the PIGB bill. But in the harmonized bill now that the House of Rep, you will find that it's a 252-page document. And you find the various sections there. So I think we're on our way.
Okay. Okay, they're looking at it. Many oil companies believe new investment in the oil sector is dependent on the passage of the PIB, which would take a more holistic approach in addressing issues around the fiscal terms, especially following the passage of the DIF offshore and the inland basin production sharing contracts, which you earlier listed. But and today you understand, you agree with me that today it ends Nigeria so much money, and so much money is needed for the economy. Should same not work for the PIB?
Yes, it is. You see, when you look at the oil industry, it's an industry that requires huge sums of money as investment. And any place where you want to invest such huge sums of money, often you are very careful over the policy environment, because if there is suspension, if the PIB is not properly is not passed, and you're not too sure of where your investments are likely to go, then the investment climate is uncertain. And once the investment climate is uncertain, you won't see a lot of investors coming in.
Okay, if you look at it, currently Nigeria is said to have one of the least competitive deep water fiscal terms in Africa, and is increasingly losing significant amounts of potential investments to other African countries. With little revenue to fund budget, how important is the passage of this bill? And as we expect the National Assembly to resume come 26, do you see them giving the required attention? What do you think they should do to hasten this passage?
Yes, they should consult efforts, even with the weaknesses of the bill. I suggest that they should consult effort to pass the bill and make a provision or caveats for corrections. That is the way forward. Because you see, there are many countries that oil is being discovered. In Ghana, oil has been discovered, and several other smaller countries are discovering oil, and they are learning from Nigeria. As they learn from Nigeria, they perfect their legal instruments and ensure that when investors come in, the investors see transparency. Unlike on Nigerian bill, for example, in the current bill, you see a provision that regulators are free to take gifts. Regulators in Nigeria are free to take gifts. You will agree with me in the recent past. Whoever is found is suspected to be corrupt, and huge cash of huge sums of money are found with him, or huge sums of money that are unexplainable are found with him, or assets that are far beyond his reach. He's always, the alibi has always been, oh, these are gifts. Now in the law, regulators are required to collect gifts. And secondly, the provisions of the law give room for the excessive powers of the minister. Anybody can come to the operators at ease, as many times as he wants, to say, oh, he's coming to inspect. The inspectorate to come and inspect. That puts fear into the investors. So I think that even with the security, that Nigerians or the House of Assembly must tickle the instrument a little to ensure that some of these errors are fine-tuned, but ultimately they should pass the bill.
Okay, Dr. Godley, you live in an environment where this PIB will benefit a whole lot of people, talking about the Niger Delta region. Can you take us through the benefits for your communities as well as Nigeria as a whole?
Okay, thank you. Let me do this. First, as an economist, I know that land has rights. And what government should have done is not to confiscate land rights and allow labor rights, because my economics tells me that labor should be entitled to wages, investors should be entitled to profits, land should be entitled to rent, so that the oil, all the flow from oil revenue should actually go as land rent. But the government has taken that, and now in each place, the bill proposes 10% to host communities. Now that 10% to host communities for me is not too clear. That 10%, is it 10% of profits? Is Is it 10% of oil rents? Is it 10% of turnover? That is not too clear. Is it
Okay,
to be paid?
Dr. Godley, for want of time, we want to wrap the discussion at this point and also refer to your last statement talking about the clearance of the 10% for host communities. The public hearing will soon be on at the National Assembly. I hope you and the communities around there will avail yourselves for clarity. Thank you so very much for joining us on Business Express this morning.
You're welcome. You're welcome. Good morning.
Thank you. Moving on, more than 3,000 urban poor to benefit from federal government's COVID-19 intervention fund of 5,000 naira per beneficiary for 6 months. Vice President Yemi Oshibajo flagged off the pilot scheme with beneficiaries drawn from 4 political wards, 2 each from Lagos and the Federal Capital Territory, Abuja. Minister of Humanitarian Affairs, Disaster Management and Social Development, Sadia Umar Farouk, who made this known to the press at the State House, says the federal government will also continue the national homegrown school feeding program once schools reopen.
Well, the government is doing its best to see that this program is being sustained. And don't forget that there's budgetary allocation for that, for the 2020, as well as for the 2021. So it's a program that will continue, hopefully, beyond even this administration.
And now our state responding to this?
Of course, they are. We are in talks with the states to see how we are going to enhance the program, to see how they're also going to make their own contribution into the program.
Business owners are yet to recover from the first wave and lockdown of coronavirus pandemic that affected businesses the world over, and then the second wave resurfaced, hitting hard on global economy. But Rebel had a chat with a restaurant owner who is determined to keep his business afloat.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
This second wave of the variant coronavirus has taken its toll on the economy, especially on small businesses as they continue to strive. Even though business owners have continued to be optimistic that things could get better, it's hard to see any ray of light for those who feel things could also be worse. Kabir Lawal Ango has been in the food business for a long time, but then things are not the same anymore, as he tells his experience.
It has not been easy. First wave, in fact, to the extent that my business, in fact, was shrinking. It was, in fact, COVID-19 has affected the business too much in the first wave. To the extent that there was low patronage, profit margin has gone down. Sometimes, in fact, you won't even get anything profit. And then the foodstuff, prices of foodstuff has skyrocketed. So it wasn't easy coping with the business, but then it was as if you would be thinking of closing the business. But it wasn't possible. The lockdown, in fact, has made so many people, in fact, not to patronize our business because of the lockdown.
With the second wave of the pandemic, Kabir seeks other alternatives to sustain his business.
Well, the only thing, in fact, one other measure I've taken, I resorted to borrowing in order to keep my business afloat. If not so, in fact, I've told you that, in fact, my business was shrinking. And then the second measure, in fact, which, I've been meeting private people borrowing money in order to keep my business. And then the second stage, in fact, is the loan, which I heard about CBN, giving out loan. So I have tried that. I have done the training, I've done the interview, to the extent that, in fact, they text me my account number, but I'm yet to get the cash. And the COVID is still affecting the business. I've not recovered from the first wave of the lockdown. It has taken me up to this time now about 6 months from the time I collected the form, I filled the form, to the time I was called for the interview, the training first and then the interview, till date is about 6 months now.
Kabir is optimistic and believes the CBN Intervention Fund will make a great difference in keeping his business alive as the world battles to contain the pandemic. Bosside Able, Business Express.
The country's external reserves rose by $970 million from $35.37 billion as of December 31st, 2020 to $36.30 billion as of January 14, 2021. Figures obtained from the Central Bank of Nigeria shows that foreign exchange inflow through the bank in the third quarter of 2020 stood at $6.97 billion. Foreign exchange inflow through the Central Bank of Nigeria decreased in the third quarter of 2020, largely due to a reduction in non-oil inflow. During the review period, aggregate foreign exchange inflow through the CBN stood at $6.97 billion, a decrease of 30.7% and 43.6% below the levels in the second quarter of 2020 and the corresponding quarter of 2019. The dollar hovered around its highest in nearly 1 month on Tuesday, with traders expecting U.S. Treasury Secretary nominee Janet Yellen to affirm a more traditional commitment to market-set currency rates when she testifies at Capitol Hill later. Let's now see how the Naira is exchanging for other currencies. The Central Bank of Nigeria says it will review the products and solutions being introduced by licensed institutions. The Apex Bank, in a circular released to all deposit money banks, money operators and payment service providers, says the bank is committed to building a financial services sector that promotes stability, fosters innovation and deepens inclusion. In continuation of these efforts, the CBN has issued the framework for the regulatory sandbox operations in Nigeria, where it shall review the products and solutions of applicants during its implementation. The CBN instructed all stakeholders in the regulatory sandbox to ensure strict compliance with requirements of the framework and all other payment system regulations as it continues to monitor development and issue guidance as may be appropriate. Stocks in Asia Pacific traded mixed on Tuesday as investors await remarks from U.S. President-elect Joe Biden's nominee for Treasury Secretary Janet Yellen. Bosside again reports.
Stocks in Asia traded mixed on Tuesday as investors await remarks from U.S. President-elect Joe Biden's nominee for Treasury Secretary. Hong Kong's Hang Seng Index led gains among the region's major markets as it jumped 2.32%, while Hong Kong exchanges and clearing soared about 6%. Hong Kong leader Carrie Lam announced an extension of social distancing measures in the city after coronavirus infections returned to triple digits. In Japan, the Nikkei jumped 1.39%, while the Topix index advanced 0.57%. Mainland Chinese stocks, on the other hand, lagged. The Shanghai Composite was flat, while the Shenzhen Composite dipped 0.749%. European stocks opened higher this Tuesday morning, buoyed by hopes that an economic recovery following the coronavirus pandemic is not far off. London FTSE in opening 37 points at 6,759. Gaining 0.22%. Germany's DAX 106 points higher. CAC 40 of France also showed upward movement. U.S. stock futures moved higher early Tuesday as Wall Street looked to bounce from a rough week ahead of President-elect Joe Biden's inauguration on Wednesday. The Dow Jones Industrial Average rose 166 points. Those for S&P 500 and Nasdaq 100 also traded in positive territory. The move in futures comes after a slump of equities last week. The Nasdaq Composite and S&P 500 lost 1.5%, while the Dow Jones was off 0.9%. It was worst week for the three major indices since October. Stocks across Africa are expected to also post slightly positive numbers as markets across the globe await Biden's inauguration and its outcomes. Bosside Able, Business Express.
This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizX. Business Express returns Wednesday by 3 p.m. Be safe out there.